All right. HPLF SFR. Okay. Wow. Nope. ABVC PXMD. All right, it's not working out. It looks like on ABVC, I'm going to sell. And maybe I'll get back in on a better signal. PXMD. This is an interesting chart. And a good spot right now. I think I might give that one a try. $0.05 of risk. If I've calculated that right, then 2,000 shares for me, I think is $100 of risk. I just had that in my head. 5 cents is 20 pieces of 100%. I think that's right. All right. Grabbed PXMD just now. It might be moving. And its float is, wow, 787,000. Very small float. Problem with this one is it's under $1. So that's the only issue there. We like to get over $1 or $3, so it would be better. QQQ. All right, let's put that over on the TikTok area here. AB. We're watching PXMD. I'm in it. Get rid of Microsoft from yesterday. And Google. Oh, wow. I just typed random letters and FGFH is a stock, so it pulled it up. Now, take that off. Okay. Let's see here. Continuing down the list. Pixel FSFR, NXTP. Already looked at it. TPET. All right. TPET. No. Just doesn't have the liquidity. MGRX, we already looked at. Altimmune. No. JGGZ, we already looked at. PRZO, CMND. NRXP, FNGD. FNGD is good enough. Okay, this is interesting. Because it's a FANG index 3x inversed. FNG down, FANG down, 3x inversed. Interesting. And it is liquid enough, but anyway, not interested in that one because it's just an ETF. NXU. No. And finally, LTH. LTH, Lifetime Group Holdings. No. All right, that's everything we've screened for. So let's get back to these PXMD and ABVC. That's basically what's happening this morning. ABVC starting to curve back up now. Okay, ABVC, it needs to get a little bit more 4-point to an uptrend over the recent little breakdown pullback that it's done. PXMD is pulling back. Never did break FWAP. This could not be a good sign for PXMD, although it is semi-consolidating right underneath the WAP, so maybe it'll hang out here. That's about all we've got to go on. But the quality of signals on the market, terrible. Just about nothing. Nothing to put your money into right now, that's for sure. And that doesn't mean to go short necessarily on anything either. Although if you have some good shorts, go for it. That definitely can be a thing. I have a short list here somewhere. Let's see, here it is, I think. Fall from grace, yeah. And that will trigger more during when the market opens. ALGN is one of them, for example. So yeah, there you can see had just a god-awful day yesterday, but it was already in a downtrend. Already had a god-awful day. Time to get in that was at 360, and now it's at 195. About a month and a half ago, it was at 360, and that was the time to get in that if you were wanting to go short things. ENVA, ENVA. Man, is that creating heat? No, okay. That is a LED light, I guess. Yeah, no heat at all. That's cool. Love that. ENVA, yeah, yesterday. Yeah, so these are all triggers from yesterday. So we'll see what triggers today on the fall from grace. If anybody's interested in that. If anybody knows anything that's down this morning, let me know. Or up, huge on earnings, let me know. But I mean, like, it should show me that in our gap list, but I think I only focus on what's up. But if there's something down and you know about it, let us know. All right. Let's take a look at the market again here. QQQ. The market is wedging up and wedging up and wedging up. It's inching up on the GDP data, which was really good. Certainly shows that we're producing as a workforce. We're actually like at really great GDP levels, 4.9%. I'm not quite sure if that 4.9% number is month over month, is the year over year number as adjusted month over month, or if we had a blip in the year over year change that was 4.9% month over month. I'm going to double check on that right now. If I can get that quarter over quarter. Yeah, quarter over quarter was 4.9%. Let's see, quarter over quarter. So what does it constitute for year over year? The U.S. economy expanded an annualized 4.9%. Thank you. Boom. So we are talking about annual. So you understand that's insane. Like, we are doing so good. we outpace the world with 20 times less people in our working nation than any huger nation that comes even close to our GDP. You just got to understand how powerful freedom is. That's impressive. It's a good thing I'm not on TikTok. 4.9% GDP, motherfuckers. That's insane. I mean, you typically rely on about 2.25%. Sometimes, when we're really kicking ass, we hit 3. Rarely do we get over 4. To be almost hitting 5? Wow. I mean, it's a sight to be marveled at. I mean, we could lend money left and right now. I mean, GDP is what pays off our debts. See, we're producing 4.9% increased wealth. What can we do with 4.9%? We can pay off debts at that are accumulating, number one, or it de-inflates things. Higher GDP kills inflation. It's great, So this is good. However, it does mean that our workforce is kicking ass, and that means they're going to have more money, all the workers, and that could lead to more spending. And so it's it's just crazy. The Fed's trying to slow down the economy, trying to stop us from doing that because it's going to cause inflation to go up higher. And what did we do? We just kicked more ass. We're just like, I'm not going to be fucking held down. If I need more money, I'll just make more money. I'll work harder, smarter, stronger. And we did it. We're at 4.9% GDP now. That's fantastic. Oh, I got to turn off the little notifications on my phone. Oh, I don't want to do that though. Shit. Because I want to be able to know if I get a phone call. I'll just have to turn it down a little bit. Okay. On the ringtone, I want up high. No, that's notifications. Okay. Then what's this? Ringtone up high, notifications low. There we go. That's cool. So that's impressive. By the way, PXMD is moving. PXMD, we potentially got in that. It's moving right now. That's kind of good. I'm going to take a little bit off. I'm going to take 5% off right here. Just in the fact that it moved up. We've got 11 minutes before the market opens. But again, it's just like that's the story of the day, man. We are just kicking ass. You have to remember that, let's say China can produce, a similar GDP, but they're not. They're actually not doing as well. But let's say they can produce a similar GDP, 4.9%. That'd be extraordinary. But let's say they even matched that. They're doing that with how many times more people than we have? At least 5 times. I think 10 times. It's, they have a huge nation of fucking lazy, fucking really bad communist workers. Like, they just cannot match our productivity levels. The differential between their efficiency and our efficiency per output per human being is 20 to 1. I've done the math before. It's 20 to 1. And now with these new numbers, 4.9% GDP, it might be even more than that. We obliterate the world when it comes to productivity. There's just nobody who comes close. And that's what freedom does. People work harder and stronger and better if you give them the opportunity to enjoy the life the way they want to with the resources that they gain from working. You work better, you work harder. Have you seen some of those like TikToks of those girls like testing USB sticks and shit? They're just doing them all day. They look so bored. They're like, and at one point I saw one girl, she put it in, the light didn't go on. She still put it in the good pile. Okay, this is what I'm talking about. Which is, we do better. We do better than that. Right on. So anyway, this morning, let's take a look at stuff. Let me get live on TikTok, and then we'll do that. So, how the whole market responds to this, it will be basically orientated towards how that hang on, before we talk about the market too, let me just get this TikTok going. It won't be that hard to do. Go live. And okay, be live. And then let's just give it a minute to warm up. I'm curious how the other day Gap was doing really good. GPS, Gap, the stores, like Old Navy and all that. I'm curious how they've responded this morning to this data. Okay, I'm looking at that. And then the other one, let's look at other retail. Target. Because retail has been strong, but Target's been under fire because of the woke stuff. There was another one we were in. Just the other day, what was that? Was a well-known retail stock? Well, let's try Best Buy. Let's look at some. Give me some retail stocks. Give me retail tickers. Let's go. Let me hear them. Retail tickers. Give them to me. Feed them to me. And I'll blast through some. Let's go. Let's see if we can find some good running retail stocks. There was something that had good earnings. I can't remember what it was, but anyway, like we know Elf has been going like insanely well. Until it fell off a cliff recently. Costco. Yeah, perfect. Yeah. Yeah, please give me more. Costco. Yeah, Costco's looking all right. Yeah. I mean, Costco's a little bit more of a staple. They do have some luxury goods in there. But yeah, there's some retail stocks that are just, retail is, it's not weak. Let's put it this way. Retail's not weak. And it's a place you could store your money, while the country is doing well and people are blowing through money that they're making. It just seems like, the Fed just can't keep them down. But retail seems to be resilient, very resilient. And retail is a place where if you can find the good ones, you can get into some strength. All right, let's look at the market. All right, the markets worldwide continued to slide after the U.S. Move yesterday, and then we were opening up quite a bit lower, a decent click lower, gapping down open until about 8:30 when the GDP numbers came out. The GDP numbers were really good. You can take that either way because now the Fed could get concerned about that. Because he's trying to slow the economy and slow spending so that we don't cause further inflation. And so you would think that the market might respond negatively, but it responded positively. So, it's very multifactored. And in fact, when the market opens, who knows, maybe it will respond negatively. But so far, we're inching closer to yesterday's low, but we're still gapped open lower. However, we were opening quite a bit lower, and usually on gap down open lower days, after a large extension, a large down move the prior day, usually we reverse and we reclaim and retrace some of the prior day's action. Usually, that's typical. That's the majority of the time. That's what you can rely on. But there are exceptions. Probably 1 out of 4. It's on the lower side of the exception, but it's probably close to like 1 out of 3, 66% to 75%, somewhere in there. Reliability, 30%ish, where we get a continuation of the prior day. That is the case not just after when we have a strong down day the prior day, but when that strong down day the prior day already extends beyond the trending rate of down move that we've been going, and then it goes down further. That usually puts it overextended, and then the next day it gaps open and then retraces. I'm saying that on rare occasion it actually continues down. Not necessarily the greatest sign, but sometimes that happens. It usually doesn't have that big of a day as it did the prior day, though. Oh, AEO, I was. Dude, well done. Yeah, American Eagle Outfitters. I absolutely was. That was the one. So, yeah, AEO. Let's just quickly glance at that and how it's been responding. Yeah, it just looks outstanding. It's a little atlas pattern in there and everything, but I got it out of everything, including that one yesterday. If you're still in it, by the way, good on you for being resilient and following your stop methodology and everything. But I did get it all out. However, these numbers show that that's where the money's going to be. The money's going to be flowing into a lot of retail type companies. And I guess American Eagle Outfitters, does a really good operation lately. Their fundamentals and how they run their company apparently very good, so as evidenced by the charts. So, it may have quite a bit more ways to run before it gets, what's the word? Squished by whatever the Fed wants to try to do next. But I don't think, the Fed's going to respond too favorably to these GDP numbers and these retail numbers. They've been very good and very strong. Like, good luck keeping us down. Kind of not happening. But like I said, there's going to be something. There always is. Every 12, 15 years, it's going to be something, and it's going to be that straw that breaks the camel's back. All right, so, who knows the way the market will go today. Good luck. You heard what I had to say about it. So the market's opening in about a minute and 30 seconds. And we are sort of tracking PXMD and ABVC, both quite crappy. But the charts look good. But the stocks themselves and how they've traded and liquidity levels and how much volume's on them and the congestion and their price levels and the halt points and all this doesn't look great. They're pretty bottom of the barrel, but hey, there's something to trade today. You could try ABVC and PXMD. All right, so we're watching those for something this morning. I looked at another 20 or 30 that were pre-selected down and scanned down from 10,000 stocks. So we've pretty much covered all opportunities this morning. And they're really shitty. That's usually indicative in and of itself of that this environment to trade in is not even worth trading in. And again, like I said before, waiting is a superpower. So if you can just keep yourself flat right now and just be present every day, waiting for the day when things turn around, that in itself is alpha, what they call alpha, which is exceeding the returns of the market. Not even doing anything right now, you're beating the market. So that's called alpha, and it's a serious thing. It's real. That is, being out of the market is how you can outperform the market. Is part of it, and it's a big part of it. You just got to know when to do that. You got to get good at that. All right, market's opening right now. Here we go. Bing, bing. ABVC fading right at the open. PXMD looking for some ticks. Pretty low float. ABVC looks like it's fading out. The market itself bleeding. Got an alert on something, but no, it went away. All right. The market's bleeding at the open. Remember, it's already extended, so there's not a lot of short shares available left after yesterday in order to follow through. You'd have to be talking about stronger sentiment than yesterday to get more people on board or for those people to double down, so it is doubtful that today on the Qs we'll have a red day. It's probably going to fill the gap, green up a little bit. That's the likely situation. But it doesn't mean that we're bullish. That's just a pullback in a downtrend. And we have that confirmed. Yesterday was a confirmed 4-point downtrend starting in July. All right, there goes PXMD with a bit of motion. Should be halting at 30. 45 cent would be 45 cent-ish would be a halt level if it were to make a strong move. No, is it? Now, let me think about that. 15. Yeah. So, not gonna halt. Looks like from the way it's moving, it'd have to get above pre-market highs in less than 10 minutes. Oh, I could do that. Well, the QQQs are pushing green right now. As I said. Yeah, Randy, thanks for figuring out that AEO thing. That is correct. And ABVC still bleeding out. PXMD would heat up if it could get over 37 cents. It would heat up a little bit. But there's only 787,000 shares available. In other words, it's only like $400,000, $300,000 being pushed around on this thing. So you can't make a lot of money off of it. No one's making a lot of money off of it. You couldn't get all in on it. You'd own the company. Anybody want to own PXMD? The whole company? Oh, you were driving. Oh, you knew what it was? Oh, thanks, man. You should be like, oh, no, don't text and drive, folks. All right, there goes the market doing its green reclaim. That's a proper response to a gap down after an extended red day prior to it in a down trend. So this is totally normal. What it does, it traps lots of buyers. Everybody gets their hopes up, and then either later in the day or the next day, because the next day could be a doji, we rip down nice and hard after we've trapped all the bulls. Oh, PXMD going hard in the other direction. This is just so typical of what we could expect here. And I guess I'll get half out there to de-risk a tad. And then half of that half right now, because I'm just not interested. It broke the opening low, and that's usually a bad sign. And again, the liquidity and the price levels and everything on this are bottom of the barrel. You have to remember that. Take that into consideration. I got in at a good price in pre-market, so even getting out now for me is around break even. It was worth a try. Now, if PXMD can get above 37, it might be interesting. However, it already failed once, so it kind of needs to prove itself twice in order to be anything better than a coin flip. All right. Well, I put an order in to get all out. Oh, it's because it's for what do you call it? Extended hours. I almost put external hours. It said external hours. All right, let's get rid of this thing. Oh wait, I just changed it today and it didn't take. Am I having an alert that's in the way? Okay, there we go. It's all out now anyway. Somehow it took the extended order. Well, that's it for me. I'm taking it easy, taking it light, sitting out a lot of this confirmed bear direction across the market. Unless I can find something, an exception to the rule, I'm gonna, mostly just sit it out and wait it out. Might trade some futures or something somewhere across here. But for futures, I recommend the company Tradovate. Maybe it'll cost you a couple of bucks a month in order to get an account there with like real-time charting. Maybe even a little more if you want to have market replay, so you could practice at night and replay the market in case you have a job. But if you want to get good at trading the market, I recommend Tradovate. I don't have any kind of affiliate link or anything, so this is just pure, unbiased appreciation of a great product. That's Tradovate, owned by Ninja Trader now. Oh yeah, Carl, it was awesome. Carl, that movie was about us. Did you see it? Did you see Dumb Money? Yeah, I saw that like opening night. It was so good. I really liked it. Oh, geez. Go see it, Carl. Absolutely. Go see it. It was really good. Review 4.75 stars out of 5. Like, really good. Like, just inches away from the top 100 movies of all time in cinema. Like, definitely a wonderful movie. Worth the money to go. And so enjoyable because it's basically about us. It's in fact, some of the people, the TikTokers that they show in the movie are my friends, actually. Yeah. Mm-hmm. Yeah, so much. And we traded on, like, I literally have TikToks on my account from the days that they talk about in the film and they should reenact and show in the film. Oh yeah, it's literally about us, dude. It's couldn't be stranger to watch and it's so more closer to home. It's so much fun to go see that for anybody who's a retail trader. Really, really good. And I would seriously give it as a movie because I know movies as well. I come from the Hollywood movie industry. I seriously give it it literally is like 4.75 stars out of 5. It's totally different than Wolf of Wall Street, but like Wolf of Wall Street's probably 5 stars out of 5. But damn, this is good. It's good. I'll probably definitely it makes it in the top 20 finance movies of all time. Top 20. I don't know where I would place it. I'd have to, do my research and rank and everything. It's easily in the top 20. I'd have to think about it if it's in the top 10, but it's in the top 20 easily. And you absolutely should see it. It's so much fun and so awesome. And when you see it, you'll be surprised because kind of like how similar what I do, like me being here right now, me on a webcam with like a gamer thing and shit, telling you what penny stocks to trade and what could be a hot ticket. It's like exactly what happened. It's exactly what the movie's about. It's about people like me. But it's about one specific dude called Kitty, Super Kitty or something. That's his name. It was like his name, and he was like, back then, it was, he was kind of a shy guy doing webcamming and talking about fundamentals of obscure fucking stocks, and one thing led to another. It started to kind of gain some popularity and started to snowball. It started to become real, but it started kind of from nowhere. It's very interesting. It covered the whole fucking thing, including the billionaires, on the other side of the trades, and everything that happened. If you remember anything from that time, you're going to be blown away because it's like literally like a Hollywood movie about us. It's really cool. It's so cool to watch. I would see it again, but it's not in the theaters anymore. For me, anyway, in my neighborhood. But I was happy to see it in the theaters. It was really good. Definitely go see it. No, not big. No, it's called Dumb Money. It's called Dumb Money. And it was basically by Seth Rogen, I think, was the guy that funded it. Executive produced it. And he's in it, I think, too. I think it was Seth Rogen. I think so. And he doesn't necessarily play a flattering character either. So, that was really nice of him to take that role. He didn't take the lead. Fun movie. What was the name of the trader? Let me see. Something Kitty. Dumb Money Kitty Trader. What was his name? Roaring Kitty. His name was Roaring Kitty. Like rawr. And all a true story. Just go see it. Like the more I talk about it, the more I'm telling you things that you should just go see. And like the more I spoil anything, like just go see it and then we'll talk about it. It's so good. It's so much fun. Really, really good. Don't watch the trailer either. Just like trust me. It's worth your whatever the fucking prices for going to the movies are now. It costs me a lot because like I get popcorn or I get a coffee or I get pizza or hot dog, whatever it is. It ends up costing, a good click, but it was well worth the money for me. But, it's definitely worth $7 or $15 or $20 or $30 if you go with a friend. It's just enjoyable. So good. It's worth it. Yeah, Roaring Kitty. This guy was a Reddit, basically a Reddit user. Like, everybody has their kind of platform. Some of these guys are popular on Twitch. Some of these guys are popular on YouTube. Some of these guys are popular on, I was originally popular on Periscope. There's like different platforms. At that time, this guy happened to be on Reddit, and it just happened to click and happened to work and happened to be it's like a perfect storm. All the right things lined up. Pretty damn cool. Pretty cool. Especially if you were around any of those days. You will remember some of the specific days going on and going, fucking A. I remember I was in the theater going through my TikToks, matching up TikToks that I edited of super days that we had to the exact days that they were showing in the movie at certain points in time. It was so much fun. Crazy. It is. It was. And you've got to see it. Thanks for asking about it. I mean, I thought you saw it, and that's why you were talking about it, because it's so great. But no, thank God you asked about it. Yes, go see it. 2 thumbs up. Siskel and Ebert. Well, anyway, right on, guys. Market is dojiing from here. And very interesting. Let's see how it goes. Like my prediction again is green grind up all the way to fill the gap, retrace a little bit of the candle from yesterday. That's the prediction. That's the 70% solid potential. All right. Hopefully that gets you on your feet today. And let's go back into the group and keep each other posted of opportunities. See you in the group. All right. And don't forget to go